Tired of struggling with fair value gaps, don't know what they are, how to use them in trading, then look no further. This beginner's course is all you need to finally understand the basics of how the markets work, how fair value gaps work, and exactly how to identify them. This is the beginner's course part 2. This is obviously over fair value gaps and imbalances. Now, if you did not watch part 1 already, make sure to go and do that. That's one market structure. That's very important for this as well. So first off, we're going to go with the basic explanation of a fair value gap. Well, it's kind of basic. A fair value gap or imbalance is a gap that is left when only one side of the market is auctioned, leaving a space where only buyers or sellers were auctioned. This leaves an imbalance where only one side of the market was offered in an area. And also another thing to note, a fair value gap is a 3 candlestick pattern. So keep that in mind. It takes 3 candlesticks to create a fair value gap. So now we're going to go into the 2 types of fair value gaps, or FVG for short. It's also an imbalance. It's the same thing. You can call it an imbalance or a fair value gap. I just call them a fair value gap. So the 2 types of fair value gaps, there's a bullish fair value gap. Bullish means we're going up. So if you were going up, you would look for bullish fair value gaps. And if you were going down, you would be looking for bearish fair value gaps. So there's bullish and bearish fair value gaps. Now let's look here on the left side. Remember, a fair value gap is also a 3 candlestick pattern. So you see we have 1, 2, 3 candlesticks here. We need 3 candlesticks to create the fair value gap or imbalance. So if you see how price went up, if you look closely between the wick of the first candle, this candle right here, and the wick of this third candle, do you notice anything different than you might see on like a normal price chart? Well, one thing I notice is the top of this wick right here of this green candlestick and the bottom wick of this red candlestick are not touching. So you see this space in between, which I will also highlight out. This space in between, and I'll make this a different color. I'll make this gray. So we have this space in between these 2 candlesticks, and this green candlestick is in the middle. So this is a gap, fair value gap, or an imbalance, whatever you want to call it. So when these wicks do not meet and it leaves a gap in between the first candlestick and the third candlestick of the 3 candlestick pattern, that is a fair value gap or an imbalance. So on the opposite side, we have this first red candlestick, we have this second green candlestick, and we have this third red candlestick. Now notice how I made these like different sizes and like the wicks, different lengths and stuff. This is to show you that these candlesticks don't all look the same, so it's not always going to look the same. So you need to know how to spot it even when it looks slightly different. So do we notice anything between this first candle's wick and this third candle's wick? Well, same thing. If you look at the bottom of this red candlestick's wick and the top of this red candlestick's wick, we see there is a gap in between. So that is an imbalance or a fair value gap. So you see we have this gap between the wicks of both of these candlesticks. These are the 2 types of fair value gaps. This is what it looks like. Remember, it's a 3 candlestick pattern. It always takes 3 candlesticks to create a fair value gap. It's just a gap in between the first and the third candles wicks for this third 3 candlestick pattern. So now I'm going to show you guys how to identify them on an actual chart, because showing you simple examples is great, but if you can't identify them on a real price chart, then what is the point? So there's actually a perfect example right here. So remember, it's a 3 candlestick pattern. So we'll write this down just so you guys see. 3 candlestick pattern is what creates a fair value gap. Potentially creates a fair value gap. And it's the gap between the wicks, or even something also to note, it doesn't always have to be a wick. It could be a wick or the body of the candle. Remember, not all candlesticks are the same, so it is going to be different. Not every fair value gap is going to look the same, just like not every candlestick doesn't look the same. So specifically what I want to look at is if we look at this shaded portion right here, I'm trying to move this circle up just a little bit further. So if we look at specifically this shaded portion right here, do we see any potential fair value gaps in this? I know that I see one. So if we look at this green candlestick here, we look at this green candlestick here, and we have another green candlestick here, right? These three candlesticks look different. They're different sizes and different shapes, but do you see any imbalance where price did not balance itself out before going higher? Well, which we'll actually zoom in for this to make it easier. If you notice this first green candlestick right here, it doesn't have a top wick. However, do you notice any gap between the first candle of this 3-candle formation and anything between the last candle of this 3rd candle formation? I do. If I see right here, we have a gap. So hopefully you guys are able to see this and this makes sense. There is a gap between this candlestick's body and this candlestick's wick. So the first candle and the 3rd candle, and the 2nd candle is always the one that's in between them. All right, so that is a bullish fair value gap. So now we're going to look for an example for a bearish fair value gap. And let's take our shaded portion over here, and we are going to look at this portion in here. So we're going to look at specifically this green candlestick, this big red candlestick, and this green candlestick right here. Do we see any fair value gaps between the first candle's body? See, there's no wick, but there is a body, and the 3rd candle's body. Now this is a great representation as well. Not every candlestick looks the same. You can see these 2 green candlesticks do not have wicks. So this is literally just the body of the candle and the body of this candle. Well, I see a bearish fair value gap here, and I'll draw it out. If we look at the first candle's body to the 3rd candle's body, we see there is a gap in between here. So this is a bearish fair value gap. All right, it's actually way simpler than you think once you break it down into the 3 candlestick formation. 3 candlesticks create a fair value gap, and it's the gap between the first candle's wick or body and the 3rd candle's wick or body. So we're going to find one more example, and actually I already found an example right here. So do we see any fair value gaps within this price action right here? Well, immediately I'm looking at this red candle, I'm looking at this green candle, and then I'm looking at this green candle. Remember, it takes 3 candlesticks to form a fair value gap. Do we see a gap between the first candle and the 3rd candle? I do. If we look at this red candle's wick at the top, we look at this green candle's wick at the bottom, and we draw this out, we see that there is a gap between both of these wicks. So this is a bullish fair value gap. Now, in the last course, I taught you guys market structure. You could potentially consider this right here a market structure shift. So when price gives a market structure shift, specifically bullish market structure shift in this scenario, not only is price saying that it may potentially be going up, but we also we created a bullish fair value gap. And you see what happens with this red candlestick? We come into this bullish fair value gap, and then what happens? We move away from it. So this is how you can use fair value gaps along with market structure. And if you didn't watch the other video, make sure you watch that on market structure. It's a great video where I teach everything and break down market structure completely. So you can combine these 2 things to potentially frame a higher probability trade. All right, so that's really just the basis of fair value gaps, and that was one of the secrets I was going to tell you guys. Is you can't just trade any fair value gap. You want to combine your fair value gaps with market structure, and then there's going to be a few things later on in part 3 and part 4 of these beginners course where I teach you some other concepts that you need to combine into this to frame higher probability trades. So we're going to actually do one more example, and I think this one will be pretty easy. So if we look at this green candlestick, we look at this green candlestick, and we look at this green candlestick, do we see any gap between the first candlestick and the second one? We do. Again, there's no wicks on these candlesticks, so it's literally the body. And you can see there's a gap between this green candle's body and this green candle's body. And then the second candle is just in the middle. So remember, the most important thing to understand is that it is a 3 candlestick pattern. The 3 candlestick patterns are what forms the fair value gap, and you can use the wick or the body. And the fair value gap forms between the first candlestick and the third candlestick. That is where you will find the fair value gap or imbalance. They are the same thing. I hope you guys enjoyed this video. Make sure to subscribe and watch, because I'm going to be putting out part 3 soon, where I'm going to go over some more concepts that you guys do not want to miss.